Well, good evening, everybody. It's Blair Nightingale here coming at you. Market Monday, special Thanksgiving week. Glad to have you guys on with us tonight for a special edition. I want to do something a little bit different tonight. We've got a shortened week in the stock market. That's the first thing I want you to be aware of for this week. We come together on Market Monday, head of the week. Right? We've got that full trading week in front of us, at least under normal circumstances. Of course, we have the Thanksgiving week. We come together to get an idea of what's happening, what to watch out for this week with the shortened week. Thursday, the market will be closed for the full day in observance of the Thanksgiving holiday. Also, half day on Friday. So, fully shortened week. It's going to be a little bit different. I expect it to be a little bit more muted. Of course, we will wait and see what it actually does, but we tend to see lower volume at these times. Again, we'll see how it actually plays out. But number one, want you to be aware that it will be a different week. So if you're wondering, hey, man, I woke up Thursday, not that maybe a lot of you are planning on doing a lot of trading on the Thanksgiving holiday, but if for some reason you woke up Thursday or even Friday, you didn't know, hey, I got up, looked at the market halfway through the day, it stopped. What happened? Well, when I was brand new, I didn't know that happened either, right? It's a shortened day. So they will open, but they will close early on Friday. So that is going to be part of the week we're looking at. There are some things that we want to be aware of and watch for this week. I'm going to point those out for you tonight, as always, but I want to go in a little bit different direction, kind of back to our roots a little bit in a way with Market Monday, where I want to give you five things that I think anybody needs to know who's getting involved, staying involved, being involved in the stock market. 5 tips. I have a saying I like to use: small hinges open big doors. These 5 tips I'm going to give you tonight are not gimmicks, right? These are 5 important things that traders can use, but they're very simple. Small hinges, big doors, right? They're very, very important. So I'm going to give them to you tonight so that you can use them in your trading. I am your host, Blair Nightingale, here for Market Monday. I want to say a huge thanks. We are not done the year yet, but I want to give you a huge thanks. We've been doing this about 2.5, 3 years now, probably. We've changed some of our focuses. We went through some amazing series. Everything is recorded, of course, posted for our friends joining us tonight on YouTube. We've got Facebook and YouTube friends joining us for this episode. But you can go back and you can watch everything we've done on YouTube. And there's a tremendous amount of material, not just updating headlines and preparing you for the week to come, but giving you key concepts, hinges that open big doors, and even expanding that through full series that have been topical to train and help you understand what is the business of trading, what is the job of the trader as you are on your journey. Of course, that's what we do here at Tradeway, is to break down the confusing world of finance for folks just like you. I tell people all the time at our live events, Wall Street didn't build all this for us, okay? They built it for them. But we in 2023 get to step in and use this. And speaking of 2023, as I was saying, I want to thank you guys. The year is not over yet, but thank you so much for joining us all this time, right? Joining us here on this program. I hope and pray that you guys have an amazing time with your families this week and into the holiday season. It is a little bit different of a trading season, right? We see, and we'll talk through that as we get in to the end of November and into December as well. Cue potential Santa Claus rally, right? We'll talk about that later. It may or may not happen. Some of you know what I'm talking about. We'll get to that in a later episode. But again, just thank you. Excuse me. Thank you to everybody out there. And I hope you guys are just going to have a great time in the holidays this year, because that is definitely my favorite time of year. Now, that said, what are these things? Remember, market is going to be different this week, all right? But we've got a couple of things here in these tips that will still come up even during this week, shortened week. Some of you guys may be holding over positions from last week. potentially opening up, saying, well, we want to get into something new this week. You may have gotten into something today as well. So wherever you're at, this is still going to pertain to the week to come. Number one, small hinges, big doors, right? This isn't going to be, this for some of us who've never heard this may feel like a revelation, but it's actually a very simple thing. For us here at Tradeway, we have a rule. Number one, we don't trade over earnings, okay? Fundamentals, data, balance sheets, earnings, sales, revenues, cash flow statement, PE ratios, you name it, right? So many. I only named a few. There are so many fundamental things, metrics that we can look at for the long-term data, the long-term projection on a stock. But remember, when we're trading, that long-term data is just not as important. It's not that it's not important at all. Okay, we're not day traders here in the Tradeway program. It's not that it's not important at all, but it is significantly less important when you consider that we may not be in a stock very long at all. Okay, maybe a couple of days, maybe a couple of weeks, give or take. So when we look at this, ultimately, we don't trade over earnings because it's not even really about the earnings data. It's the volatility. The long-term investor is going to look at the fundamentals because we're looking for a projection. The short-term trader is not looking at these news items to guess, to ascertain direction, okay? We're doing it to gauge volatility. Traders want some volatility, but we don't want too much volatility because then the risk becomes much harder to manage. In the case of an earnings report, using straight ahead buying stock directional strategies, right? There are strategies out there that are designed to capture profit in volatility, right? Something like an option straddle strangle. There are different ways to do this, right? There are many ways to do this. However, when we're buying stock, we're buying directional options, we don't trade over earnings because the volatility is such that the risk management, which is our first job as a trader. You say, Blair, I thought the first job was to make money in the markets. I like to say there's a fruit system and a root system. The fruit system comes from the root system, not the other way around. For the trader, the root system is risk management, right? It's good process. And we'll talk about that a little bit more in a minute. But if we get that root system right, that is primary, okay? We want the fruit to flow from the root system. So good process includes not trading over earnings. So check your earnings report. Always check your earnings report. You will notice this Tuesday, okay, after the market close, we've got a big one. Most of earnings season is behind us now, right? At this point in the year, most of it, but they are spread out over the quarter. We'll continue to see earnings here and there. We always need to check before we look to trade a stock. Where's the earnings report? Well, NVIDIA, one of the stocks we've actually been following in our programs, and we've even updated several times in the last month here on Market Monday. And a nice channeling stock, bounced its support, moved up, broke through resistance as much of the market did, breaking out of that downtrend, right? So it actually gave us a pretty good move, but as it's moving, it's getting close to earnings, which will happen tomorrow, okay? Tomorrow it will happen after market close. You'll see earnings on NVIDIA. So that's number one. For those of us who didn't know that, right? Some of us have heard, right? We've heard the coaches or some of the instructors here at Tradeway talk about that. But for those of us that don't know that, that's something that's very important. And I'd like to just speak to those of us who are maybe newer at this, right? I tell people every weekend when I meet them all around the country, there are things that you can learn. This isn't guessing. This isn't crystal balling. I like to say it's not guessing, gambling, or going for it. But you can actually learn step-by-step processes and rules that give you the ability to trade in the stock market without knowing what the future is, which of course we cannot do. Nobody can do that. That's not the skill set of trading. A simple thing is managing risk. One of the easy ways we do that, we don't trade earnings. That's number one. That for you could be a big one, okay? I've certainly met people who like to break what maybe wasn't a rule for them, but certainly is a rule for us. And there's a real potential for the boom bust cycle. We can get in on an earnings report, it goes our direction, and we think, well, this is my strategy. This is what I'm going to do now. And then the next time it goes against them, and it just might be catastrophic on the account, right? That's not a consistent approach for long-term growth. So as the trader, again, we don't do that. Number two, this week, coming up, 2 p.m. Eastern Standard Time. We couldn't have a Market Monday without saying the Fed, right? We can't say anything on Market Monday, it seems sometimes, and not eventually get into a conversation about the Fed. So to the trader, once again, volatility. Thinking, knowing, reading that the Fed is coming up doesn't tell us the direction. I don't speculate on the direction with our students when I say, well, we got a Fed meeting coming up on Wednesday. Those FOMC meetings will come up on the Wednesday afternoon. This week's a little bit different, but I won't speculate on that because it doesn't really tell me what the direction will be. It just tells me all eyes are on the Fed so that we can manage, once again, the volatility of what's coming. So I think the big thing is earnings and Fed, but overall, I could say for the trader, news is not about direction. It's about measuring and gauging volatility so that we are appropriately preparing and managing risk for high volatility environments. Sometimes these earnings reports come and go. Sometimes these Fed reports come and go, and there's not a lot of volatility. But there certainly can be, and there often is, at least in the short term. So 2 p.m. Eastern Standard, Tuesday, tomorrow afternoon, you're going to see the Fed is going to release their meeting minutes. This won't be quite as fireworks, if you will, as what we tend to see on a Wednesday afternoon, but it's an important point to highlight as we go through the shortened week that we will see the Fed releasing that news. And the bigger point here is that we want to know when the Fed is scheduled to speak. Of course, we try to update that for you right here on Market Monday, every single Monday. And then, of course, if you're in one of our programs, that's something we're having in an ongoing conversation. It seems, as I mentioned, almost all the time. The Fed, big deal. Number three, traders. All right, this one's for you. Practice your technical analysis. Okay. I was talking to one of our other coaches last week out in Colorado Springs, and he highlighted something to me that I want to relay here on Market Monday. He's constantly telling, and our coaches here at Tradeway are telling the students that we have, and of course, right here on YouTube, Facebook, we do many programs through the week here on Tradeway TV to help people understand what trading is and what it isn't. And in the process of doing so, encouraging people who want to use the stock market to multiply their money. Ultimately, we want that fruit system, right? Where we're making money in the stock market. That's the goal we're moving towards. But ultimately, we've got to give ourselves the permission. Okay, we need to even require it of ourselves if we're learning to trade. Give yourself time to learn to trade, right? Learn to trade. Know that, of course, it is, as I say on here many, many times, a learnable skill. Okay, this isn't crystal balling. This isn't guessing, gambling, or going for it. As I mentioned, we can learn how to find edge in the markets and then manage risk around that edge. That's how we utilize our program. Okay. If you've never taken our program, you don't understand the foundation of how we really do that, tradeway.com/events, step one, start your journey class. I just taught one 2 weeks ago here, right online on Zoom. You guys are joining us on Facebook and YouTube. We'll do a 2-day Zoom Friday, Saturday, and you can join us and we'll show you how we really approach the stock market in a way that has a step-by-step process and looks for edge in the markets. But we have to give ourselves time to learn to trade. And when we're so excited, right, as we tend to be in getting involved and learning new things that we can do with our money in the stock market, right? I was talking to students this weekend, and they're learning that there are options that are insurance on their long-term portfolios. They have 401ks, they have IRAs, they have significant amounts of capital that are exposed to stocks, and they'd have never been told one time in their life that they can actually buy insurance on that stock, right? You say insurance, I didn't even know you could do that. And that's my point. They get excited because they're starting to learn things they didn't know they could do. However, in that excitement, we still have to say, all right, I'm going to learn. I'm going to learn to trade before I trade. Some people want to skip the learning to trade and get right to the trading, right? The live money, even big money trading, which we don't recommend. We want to start small. We'll get bigger once we get better. So practice, practice, practice your trading. Practice, practice, practice specifically your technical analysis. If you're going to approach trading, swing trading directionally like we do, even with some of the more neutral cash flow strategies that options can allow you to do, go back on YouTube and watch our options series, which we did a little while back, and you'll know what I'm talking about. But you'll want to practice your technical analysis. You'll want to practice the process. You want to practice with virtual and then practice with small money before going into anything bigger. It should be progressive. We should be process focused before we're profit focused. Practice, practice, practice. One last note on practice. If you practice not knowing what you're doing, then the results of your practice will simply be the results of not knowing what you're doing. Learn, get coaching, teaching, accountability, and implementation as you pursue a process of transformation. Then your practice has the information and application it needs, where the results are something that's coming from knowing and growing in what you're doing and not just winging it, right? So that's something we really want to understand for our practice. Side note, just want to tack this in here, right? Trading is not knowing the future. Technical analysis is not about knowing the future. That's one of those straw man arguments, I think, that are stated against traders. Okay, traders are risk managers, not fortune tellers. Okay, so we're not claiming to do that. Okay, but we use patterns, human behavior, price levels to see probability in the stock market that play out over and over and over again, a lot like something like this, right? Which we've been following here in the Market Monday series for some time. And of course, inside of our programs, we're talking through patterns and things like that. I've shown this one many times. Why? Because it's one that we did just recently look at, and it moved clearly, right? Not every day was a green day. It doesn't always go directly from support to resistance, but a nice clean pattern that moves from the bottom up to the top. Okay, this is where we're looking for probability and edge. There's more to talk about here than just finding the pattern, but that is absolutely foundational. Once again, getting back to that step one, start your journey course. If you've never taken it, or if it's been a little while since you've taken it, might not be a bad idea. Go back, get yourself a refresher. If you've never done it, tradeway.com/events, and you'll be able to learn that. That is number 3, practice, practice, practice. Number 4, trading. Now that we've looked at the patterns, okay, news, this is what we call market tone, okay? That's one of the legs of our trading table. But we get to number 4 and we realize trading is, well, let's say 10 to 20% technical skills. Okay, I just said practice, practice, practice. Listen, we want to get good at that. There's no hard and fast rule on whether or not it's 10 to 20%. Maybe it's 25, maybe it's 30. I don't know exactly. What I do know is the majority of trading, 70, 80, 90%, it's not technical. It's not technical analysis. It's not another indicator. It's not another strategy. All those things matter. All those things can help. But even if you have all of those things, trading is 80, 90%, majority either way, mental. It's mental. It's what's going on, as I like to say, behind the eyes, between the ears. It's emotional. What happens when you have money on the table? What happens if you are currently losing money in the stock market? Right? What happens in your emotions? What happens in your self-control? Okay. What happens if you're making money in the stock market? How badly do you want to pull that out of the market as quick as possible, right? Do you find that you always get out too early? Do you find that you always stop out too late? You might be a great trader, but those two things are driven by emotions, not a lack of technical skill. I'm speaking to some people tonight, and it's actually no small thing, but it's not your technical ability. It's your emotions. It's your mindset. Okay. Do you find that there are opportunities there, but you just don't take them, or you take them too late, or you don't take them and then they do what you'd hoped they were going to do? And so you go take a lesser opportunity to make up for perhaps the frustration of missing the one that your system said you should have taken in the first place. That proves in that instance, you're able to identify opportunities, right? Certainly potential opportunities are there, but you're not taking them. Why? Because of the market? No, because of what's happening in you and me. Trading is huge, huge, huge on the mental game, right? It's primarily, could we say 80%, 90%? Sure, we could, right? Maybe it's 70. Either way, it's a majority, okay? It is mental. So we must be in a process of learning to manage our emotions. Practice small. Focus, I said this already, on the process, not on the profit. So easy in the beginning to be fixated on the profit at the expense of process. We don't risk manage, and that's when we can get into trouble. Okay. But it's actually not trading well at that point. We've got to have process before profit. Journal your trades, track your results, have coaching and accountability so that when you do something in the markets, you're getting valuable feedback that moves the needle on your implementation and your behavior so you can make meaningful adjustments to the next trade that you do. Moving ahead, at least 1% improvement. I don't necessarily mean 1% return every time, right? But 1% in your process, 1% better. You're just getting better at what you're doing. Having that outside source is massive for doing that. I would say small hinges open big doors. I don't think coaching is a small hinge, right? I think coaching can be like a battering ram on the door, but tracking them, having an understanding of where you're going mentally as you've been trading, it's absolutely huge. I tell people when they're tracking their trades, don't just put down stock prices, options, premiums, dates, and tickers. Okay. Give yourself one sentence. What were you doing, feeling, thinking when you got into the trade? What were you doing? What were you thinking, feeling when you got out of the trade, right? Give yourself a little bit of space to record that as well. In 6 months, when you look back, in 6 weeks, when you look back, that will be very valuable data to see patterns and habits in your own trading, where you're strong, where you're weak. You want to learn how to do that. So we can't know the future. So we've got to know I can't manage, I can't control what's going to happen in the stock market. Okay. And the more I hold on to that, hey, trading is needing to know the future, the more anxious I will be. And most likely, the less powerful my trading is going to be, as it's under the influence of anxiety. Okay. I can't know the future, so I want to let go of that. However, I can't know the future, but number 5, I can look at the futures, right? Now, if you've never heard that term futures before, you might be a little perplexed. What's he talking about, right? What does that mean when he just said, what are futures, right? We can't know the future, but we can know the futures. Now, maybe some of you guys, in fact, I'd say it as a question, have you ever heard or even read perhaps in financial news, heard it on the news, futures opened at, right? Tomorrow's futures look to open, futures are down, futures are up. If you've heard that, I want to explain to you what that means. If you've never heard that, I can explain to you what that means, because the futures are something that we can use. Okay, we're not going to trade these. This is something that we can actually go out and trade. That's not what we're going to do. It's a totally different thing than buying stocks. Okay, but we can actually use an instrument. It's a financial instrument that are called the futures, to know, or at least have a strong projection of where the stock market is going to open in the morning, right? Doesn't necessarily tell us what the stock market's going to do all day long, but the futures market opens before the US stock market opens. So we're able to see where the futures are at before the stock market opens, and it gives us an indication of where the market is likely to open. And it is not always, but very often, highly correlated to the open of the S&P 500 in this case, right? The ES, okay? The ES is the symbol for the E-mini S&P 500 futures. What they call them futures. These are contracts that can be bought and sold. And what they do is they are instruments meant to speculate on what the price of an asset might be at a point in the future, right? What will it be in the future? They can be used as instruments for hedging on commodities and assets. They can also just be used as a highly leveraged product for speculators, right? Using them to trade market direction. Okay, so the futures markets can be traded in that sense as well. And there are certainly other applications. But these are some of the things traders use. You and me don't have to understand everything about futures. In fact, we are recommending that you do not look to trade futures at this point. We certainly don't say that for our Tradeway students. In the beginning, this is not an instrument. Well, I'll say it this way. In a future, you can actually lose more money in the position than you put into it. Okay, if you buy a stock that costs $10 and it goes to zero, you're going to lose 10 bucks. Okay, if we do options, okay, long puts and calls, whatever I put into that, if it goes theoretically all the way to zero, I simply lose what's in the trade. Now, I wouldn't want to do that. I'd want to have healthy stop outs and risk management, but theoretically that could happen. Whereas in the futures market, things can go against you more than what you've even put in the trade. They're highly, highly leveraged instruments. And so this is a whole nother level of risk. But what I'm talking about here is the ability to simply use them. I'm even going to show you this right here. We're going to jump on over to here. I just did a simple Google search. I'll put this up on the screen just to see where are the S&P futures, right? So this is an older screen that we just went out and we just did a Google search on here. But I can simply go out and go, hey, how do I look at where the futures are, right? I might be using my phone and I can use the CNBC app, or I can go on to anything that is, there's just many different stock tracking apps and things like that. Some that I use for alarms. It depends on the charting and broker that you use, where you can set alarms on your phone. But you can look up the futures pre-market. Okay, this is not a crystal ball, but it's just a useful thing to use before the market opens to see what's happening pre-market. We can't know the future, but you can look at the futures, and I would suggest just explore it a little bit, broaden your market knowledge, and see that that can be a tool we can look at pre-market to know what's going on. Okay, guys, what's going on this week? One last reminder. Thursday, markets will be closed. Friday, half day. So happy Thanksgiving from us here at Tradeway to you guys out there. We hope you have a very happy holiday week with you, your family, and moving into the Christmas holidays. Of course, we're not done here. We're going to be back right here, 6 p.m. Central, your time, Market Monday next week. Dive in for a full trading week in the markets. And of course, we're going to set you up for what we got to watch for in the week to come at that point. My name is Blair Nightingale. If you need anything, you can always reach us. support@tradeway.com. Market Monday, you just put it right there in the email. My team will send that on over to me. I'd be happy to hear from everybody here. Thank you once again for being on with me tonight, and we